Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, June 10th, with our pre-market prep session. Today, we're going to cover our three pillars here at Game Edge: sentiment, structure, and trend, as well as understanding our today's structure. We identify key levels of reference, and then we'll look over the intraday volume flow from yesterday and show you the tools that we use to monitor that. And then we'll talk about some execution and trading plan around the key levels at the end of this video. As always, we like to present our pre-market prep and routine. We have a simple, systematic, repeatable plan that we do every morning. This is without bias. And basically, we just look at the overall SPX options complex. We get an idea of where our market participants are positioned. And then we lay out our trading plan of if-thens, where the possibility of price may be going for the day. So we're currently looking at our market trend model. Again, this is just based on the tick index. So this gives us an overall view of buying versus selling within the overall market. Quick orientation, the bolded CT is our intraday. Obviously, if it is moving up, there's more buying versus selling. Colored ribbon is our longer term look back period. If the red is above cyan and sloping up, then market participants are positioning for longer term trend and overall capital at risk on a longer term time frame. New highs versus new lows continues, green above red, so more stocks are being bought than sold. Our filtered cumulative tick plus 1,000 minus 1,000, these are institutional orders. We did see some of that institutional or larger market participants buying towards the end of the day yesterday. And then we did see that end of the day pullback, but the cumulative tick was still decidedly to the upside, indicating that buyers are in control of the overall market. Moving on to the SPXA, we separate the SPX into the SPXA and SPXP. The SPXA contracts do not turn over as much and is not as speculative as the SPXP. This is larger institutional positioning. So we're call dominated above and below spot price in green through the whole net delta and net OI to the upside. So call speculation obviously alive and well via institutions and larger market participants. So that's really the takeaway. Unless we see some significant change in this structure or sentiment, we are looking at a bullish setup for most institutions and larger market participants. Moving on to the SPXP, these are a little bit more speculative contracts. You'll notice over here via the expiry, these are at least single day or the weekly expiries or single day for the rest of the week. So obviously we have all of them turned on now. So it's all expiries obviously out until next year. Quick takeaway is we're call dominated above and below spot price, is denoted by the green net deltas and net OI to the upside. These arrows just draw your attention to key strikes that we like to monitor. So make sure you put those on your charts. Those obviously can be areas where price can stall, price can move through quickly, or if they're above can be supportive, or if they're below it can be some sort of resistance point needing a significant amount more of out of the money call speculation to move through those areas. So obviously we've drawn to 60.50. That's a key level to the upside. Most likely that will be a cap on price unless we get some exogenous news catalyst or we see a large amount of out of the money call speculation come in for today. And then you see our transition levels obviously staying above transition leans a little bit more to the bullish favor, a little bit more in the call dominated positive gamma area. With inside transitions, it can be slightly choppy. Again, these are all expiries. So this is just an overall broad brush view of the SPX options structure. And then noticing that 5,900, 5,905 to the downside would be those key supportive levels we'd watch, and just a confluence of the JPM short call strike hedges, which we've produced a significant amount of content on that. If you go back and review, if you don't really know what the JPM hedge is. Denoted down here by the arrows, we have significant expiries coming up, and where this money gets positioned after expiry will be key, whether we can maintain this trend to the upside or we see some more weakness after this expiry. Moving on to the SPXP GEX ratio, this is just a put call ratio, and we add a time component to it, which is gamma. The slope to the upside of the red dotted line just indicates that call speculators are still maintaining overall control, and this is just an overall bullish look. What would turn to a bearish look is if this starts to turn to the downside, indicating some of that short dated call gamma is leaving the overall complex. Again, staying above 1 is that parity level of calls versus puts, and we lean a little bit more bullish if we're above the overall 1 level. Moving on to the SPXP delta balance, we're just separating the overall option structure above and below spot price. This just gives us a greater look or a greater granularity of how market participants are positioned above spot price and below spot price. And we reference these as right hand plane above spot price and left hand plane below spot price. And then our delta balance is just the aggregate, which is the blue line. If we're above zero, then call speculators or bulls are in control. And then we have the individual planes here. And basically they're just hanging out at 0.5. So really not much urgency either direction for upside or downside. And then delta balance staying at 1 indicates that bulls or out of the money call speculators are maintaining overall control. Moving on to the SPXP0DT, which is what everybody wants to look at for the intraday trading plan. Our legend is down here, noting our transition zones, DEX and GEX. They're basically a confluence today, so this is a great trading setup for us. This gives us an unambiguous understanding of where spot price needs to stay above for us to lean a little bit more bullish and be supportive type action. Obviously, it's just a confluence also of that 6,000 round number. Obviously, you'll notice the round numbers, the quarter numbers, and the half levels usually have pretty significance in the overall structure. So that's why you'll see those key sensitivity areas will be a confluence of those levels also. So staying above, we'd be a little bit more bullish. We'd look for any pullback into this transition area to be supportive for us to go long, for a move back to the upside towards that 60-20 level where we stalled yesterday. That'll be a confluence of that drunken sailor range. If we're in the drunken sailor range, it can be a little bit more volatile. As you notice, there's very low exposure. You could even draw the drunken sailor range a little bit down here towards that 59.95. But again, we'll be at the mercy of the market winds and intraday positioning within the overall drunken sailor range. That's why it's vitally important that we watch our volume command and intraday flow as we're within this overall area here to give us an idea of directionality. If we're above the drunken sailor range and that confluence of 60-20, we'd be long, looking for an upside towards 60-50, most likely a stalling within that overall area, large strike above us as the day goes on. That will continue to grow as a headwind. If we get above the 60-50, then we'd obviously be targeting up here towards our COTMC level. This is a proprietary level here at GameEdge where out of the money calls go in the money, and many times we'll see some sort of monetization event. You also notice the expected move is outlined by the pink implied move over here. So again, that could be an area where we see some stalling to the upside from 60-50 all the way up to 60-70. Again, if we get some sort of news event and see an extreme amount of out of the money call speculation come in via our vol-m command, and we would go right through 60-50, then obviously some upside is available for up towards that 60-70, 60-75. Not really anticipating that we get up to that level today. We're anticipating we see stalling around 60-50. If we come up to that level and we start to see stalling and failure, if you're opportunistic intraday, there would be a trade to take via the short side for a pullback down towards 60-20, and then obviously a pullback down towards those transition areas that will most likely be supportive. On the bearish side, if we do get below transition area, we'd probably see a pullback down towards this 59, 80, 85 area. And then you see a significant amount of in the money call speculation come in there at the bottom of the overall expected move, 59.60. Really would not anticipate anything below 59.50 unless we'd have to have a significant change of overall structure and sentiment as well as trend. You'd have to see a large amount of out of the money put speculation come in and a significant amount of in the money call closing below this transition area for us to move significantly to the downside. So really not anticipating that. Most likely it would just be an overall pullback, an opportunity to get involved in an otherwise bullish structure of sentiment and trend. As of now, we're looking at all of the market pullbacks as an opportunity to get involved on the upside, as long as we continue to maintain this call dominated positive gamma overall structure. So again, quick takeaway, need to stay above transition. Any pullbacks will be supportive and able to be bought. As of now, we'd likely look for 60-20, move through there to the target of 60-50. If we fail under 60-50 and you're opportunistic, you could short back down towards 60-20 or top of transition. If we're below the transition area, obviously be looking for a little bit more weakness. If we fail If we come up under the transition area and fail, that would be an opportunistic short to pull back down towards 59.75 and 59.60.65. Obviously, in the context, we'd need to see our volume command trending down on both centroids, and you'd want to see the overall market trend model weakening slightly if you're looking for any shorts. Intraday can be quick shorts; those would be very small positions and very quick time frame. But for us overall, or me personally, I'm going to be looking for pullbacks for an opportunity to get involved on the long side. Moving under a volume from yesterday, this is our intraday volume analysis. This is what we like to watch for our intraday volume flow. And this just indicates basically if market participants are positioning for the upside or the downside. So quick orientation, the green solid line is your mass or your call centroid of volume of all the options contracts being transacted. And the red obviously is the put overall mass of volume of put contracts being transacted. If these two lines are crossing each other or intersecting, as you'll see here in a few minutes after the open and the noise, this indicates consolidation for the day. If both of these are trending upwards in a parallel fashion, that would be an uptrend day. If both of these are trending down, that would be a downtrend day. And you see basically for yesterday, once we got the crossing of these two, basically the consolidation on out until about 1 o'clock, and then we started seeing the call centroid lift slightly, the put centroid come down some, but we really never saw that positive overall slope of the call centroid. The linear fit line here is the dotted line, basically projecting where we would close, but you really never saw this really go in an upward sloping fashion. So the upside was going to be a difficult traverse yesterday, unless again we saw a significant amount of out of the money call speculation come in, which we did not. Also notice the spot price here trending right up towards that 60-20 level and continuing to get it rejected. And you'll notice the call centroid, we really never saw that call speculation rise above those areas of 60-40, 60-50, 60-60, which would give you the upside speculation that you would need for spot price to break through that 60-20. So that's a key indication here. You see actually we had a high here, then a low there, and then another basically matching that low, and then we started trending down. So the end of the day, most likely was not going to see that significant price appreciation. We like to watch those peaks and valleys because that tells us where the peak of that call speculation is occurring and flattening out. And then we did not continue to make new highs on that call centroid. So again, price appreciation was going to be difficult. And then to the downside, we really did not see a large amount of put speculation. These were not in a negative slope. They were just continuing to trend up under spot price. So that was just telling us that we're not going to see a significant move down in the overall market. So this intraday volume command really is vital to watch your intraday flow. It gives us a key look into the area or granularity of what market participants are doing in real time and where they are speculating. And then obviously we want to be on that same side of where market participants are speculating. So moving back to obviously the game plan for today, if you just joined us a little bit late, confluence of the DEX and GEX transition. 6,000 will be an extremely important level to stay above. We'd look for 60-20. Yesterday was that stalling point. We need to get through 60-20 for a move up towards 60-50. Most likely see us stalling around that area 60-50. Below transition, we'd look for a little bit more weakness down towards 59.80-75. And then the bottom of Drunken Sailor range here is again 6,000, and then a move down towards 59.60-65. Again, all these would be an opportunity to get involved on the long side, most likely on any pullbacks, as long as we see the market trend model maintain, as well as the call speculation. All right. Thank you, everybody, for joining us. If anybody has any questions, I'll stick around for about 5 more minutes, and we can review any stocks. We can review how we go about looking at the overall options market, how we trade these tools, whatever anybody wants to go over. If you're joining us, just post in the chat. I'd be happy to answer questions live. Again, I'll be hanging around for about 5 more minutes. Thank you, everybody, for joining us. Make sure you're following us on YouTube at Gamma Edges. Make sure you're signing up for our newsletters on the weekends. We provide a significant amount of educational content. We go through our overall philosophy, basically our theology, our plan, and how we go about looking at the day and how we look at setting up our trading plan via the options market. So, all right, thank you everybody. I'll be hanging around. Just throw your questions in chat if you want to go over anything. So. We can take a quick look at pre-market price. I'll go ahead and pull up my trading view chart here. So pretty much what we went over there on the overall game plan. This is the full complex trading view overlays. We produce this for all of our members. We have 0 DTE, we have full complex, we have it for Thinkorswim or TradingView. So you can just download the overlays, the script, and then you just paste it, and it gives you the gamma levels, gamma 0, transition levels, gamma delta levels for our scripts. So again, you can do this intraday. It's produced automated throughout the day, so you can update it at your leisure. But again, I was discussing that 60-20. You see that's really kind of a confluence and TA level also. So here at Game Edge, we like to let new people know, or new members, that you can also bring your existing trading plans, however you trade. If you trade TA, then these levels really just give you another area of confluence to look at, and gives you a little bit more certainty on kind of how the option structure is overlaid with your TA levels. So again, transition area, you see P-Trans 6,000. We already discussed 6,000. Staying above that will remain in a little bit more call-dominated positive gamma environment. You see 0 GEX there at 59.95. That was kind of that bottom of the drunken sailor range. So again, below 0 GEX, that's really the theoretical balance point between calls and puts. So below that, you could lean a little bit more weak, but again, pullbacks in this overall call-dominated environment should be opportunities to get involved in the overall structure. And then we have this area up here, 60.35, and then we talked about 60.50 to the upside being an area where we may stall. But right now, pre-market here, we're just kind of chopping around between that 6,000 level, haven't reached that 60-20 level. But again, just an extreme choppy area within this overall option structure. If we get through 60-20, I think we'd probably push up pretty quickly towards that 60-35 area. So that's an opportunity to be long if we push through that area. So, all right, I'll hang around for about 2 more minutes. If anybody has any questions, just post in the chat, and we'll discuss them. All right, thanks everybody. Thank you for joining us. We will be doing this the rest of the week, so make sure you set your reminders on 9 a.m. Good morning, St. Anderson. Set your reminders for 9 a.m. We'll be doing this every morning for the rest of this week, and then we'll maybe make some tweaks and then see how we're going to proceed with the morning pre-market prep. We'd also like your feedback too. Let us know how we're doing. Let us know what you'd like to see covered. And all right, thanks everybody. Have a